All right, let's get something clear. The Federal Reserve doesn't protect you. And today I'm going to show you exactly who it does protect, why that matters, and how it quietly drains your wealth. For those of you who don't know me, I am Casey Marks. I'm the founder of Crown Haven. I'm the founder of Bull Baron. I'm the founder of Pinecone. I'm the founder of Annuity Lock. I've spent the last 15 years of my life, over 60,000 hours, helping families navigate the traps built within our financial system. And I have been systematically addressing each of these issues within the world of finance to either help real families, help the people who support real families, etc. I've consulted with the billionaire class. I've seen the incentives up close. I know who the Fed is built for, and guess what? It ain't you. I started all of this work because I watched my widowed mother get devastated financially by a system built to fail her. A system that is built to profit from confusion and dependency. And I wanted to stop that. And that led me on this journey of building all these companies and learning all of this. And so that's what I'm sharing. For a more detailed outline of everything I learned, you can pick up my book called Inheritance, Blowing the Lid Off of Big Finance. That's coming out June 2026. Until then, subscribe, share this with people that need to hear it. Follow me at RealKCA on X, because I'm exposing literally everything they don't want you to understand. And somebody deserves to tell you this straight. So let's talk about the lie they've been feeding you about the Fed. The Federal Reserve works to protect American families. They've got a dual mandate, right? Somebody will look up what the dual mandate is. I'm not going to go over it right now. But that's the lie. The media repeats it. The chair of the Federal Reserve Board of Governors repeats it at every news conference. Economists defend it. Politicians hide behind it. Here's the truth. The Fed was not built to protect your family. The Fed was built to protect the banking system, period. Full stop. The Fed doesn't save people, it saves balance sheets. If you were to go back to the history of banking and look really into how banking, how fiat currency even began, you would understand that printing money isn't that new of a concept, and the Fed just industrialized it. They made it a government or a quasi-governmental entity. That's all they did. The Fed was created in 1913 after a series of bank failures. Why? Because banks are going to speculate. Its original purpose was simple: protect banks from their own incompetence. Why? Because if there's enough people that get upset by the bank's incompetence, then we won't have banks. But it was really self-serving. Over time, its power expanded to interest rate management, liquidity management, monetary supply management, financial markets as a result of that, recession management, employment, asset prices, obviously, bailouts, TARP. And the more power it gained, the less accountability it's had. And here's the dirty truth. Every time the Fed intervenes, quote unquote, somebody wins big time, baby. Look back at 2022, look back at 2020, look back at 2018, look back at 2009, 2008, 2002, 1999. Look back, do your research, see who won, and other people lose really big as well. It's never the same people. Spoiler alert, you're usually not on the winning side of this equation. So who does the Fed actually protect? Let's break down who these winners are, because it's certainly not American families. The Fed protects the banking system. Banks have been shown over and over and over and over and over and over and over again throughout their history to make irresponsible decisions, to take excessive risk, to mismanage their own liquidity. The Fed then bails them out. The American taxpayer then pays the price. The Fed protects Wall Street when a market crash happens. What does the Fed do? They cut rates. They make lending less expensive to propel growth. When liquidity dries up, they print money. When hedge funds are threatened, they backstop everything. Meanwhile, when they employ these strategies, your savings get diluted, your dollar weakens, your retirement gets riskier. They kick the can. The Fed also protects the government. Who is the largest debtor in the world? The US government. Well, inflation helps debtors. It makes their debt easier to pay off. It destroys savers. It erodes the value of their savings. So no, the Fed's job is not to help you. Its job is to make sure the government always has access to cheap money. The Fed also protects asset owners. This is not your typical wage earner. This is owners of assets. Stocks rise, real estate rises, commodities rise, crypto even rises a lot, actually, when the Fed prints money. What happens to your wages? They stayed the same. So asset holders get richer, workers get squeezed. You want to look for the scapegoat for the inequality gap. Everybody wants to point at capitalism. Look, I've consulted entrepreneurs for 15 years, man. These are some of the most innovative people on planet Earth. They are creating jobs. They are paying their people well because they understand that good culture creates good companies, which creates good products and services. You want to look for a scapegoat for the wealth inequality that we're experiencing. It's the Fed. And then they pretend to be shocked by the inequality that they've created. Nobody wants to call that out. They are silently transferring your wealth away from you. Here's how the theft works. It is quiet. It is consistent. It's legal. Number one, general inflation. The Fed says they target 2% inflation. I did another video on this, but it bears repeating. They target 2% inflation. That just means 2% annual theft on your dollar. Over 30 years, over half of your purchasing power is gone. Most people don't understand this. Literally, most people don't understand this. I've sat down with so many families, hundreds and hundreds and hundreds and hundreds of families. We serve 775 families at Crown Haven. Some of them kind of understand inflation. Those are the ones who actually paid attention. But most of them have been raising families, focusing on their areas of expertise. I'm an engineer, I'm a surgeon, I'm a lawyer. They know what the media tells them about inflation. They don't understand. Asset inflation on top of just inflation, which is a different thing. When the Fed prints money, assets inflate, which makes you feel really good. If you own your home, if you own stocks, if you own crypto, if you own a piece of land. If you don't, you just simply get priced out. How is it for the first-time home buyers out there right now with high interest rates and housing prices where they're at? Then you've got artificial interest rate suppression. When the Fed forces rates lower than reality, they force the rates down to encourage growth, to keep things moving. Well, okay, now let's say I want to put my money in a safe place. Before we even get into the FDIC reserve or its requirements or the fact that it's a totally different topic. Before we even get into that, let's say you want to put your money somewhere safe that's FDIC insured. Is your savings rate going to outpace inflation, real inflation? No, sir or madam, it's not. If you're a retiree, let's say you've annuitized an annuity because you listened to some schmuck at a steak dinner seminar and he said, okay, we're going to put half of your IRA, if he's even ethical, and he does half, but he goes, we're going to put half of your IRA in this annuity that you're going to get a bonus on, and then you're going to annuitize it, which is systematically distributing your money back to yourself based on your age. And it's going to provide you lifetime income, but that lifetime income is stagnant. So it's giving you $30,000 a year for life. Cool. It's not inflation protected. So that retiree just got punished like nobody's business between 2022 and 2025. Everything got more expensive. You think they might have to dip into their other assets? The pension system weakens. It's a mortality game. If inflation is going to be higher for longer, or interest rates are suppressed, pensions don't do well under that set of circumstances. But the government can then borrow cheaply, and you're subsidizing this entire system. This creates boom-bust cycles. We're currently in the middle of one. When money is cheap, bubbles form. When money tightens, bubbles burst. The Fed is trying to maintain a delicate balance, but they create the storm, you experience the wreckage, and the most powerful get bailouts, and the public deals with the rest of the consequences. Every crisis ends with CEOs being rescued, banks being protected, institutions being backstops, families being devastated, man. And people forget. Do you guys remember what Orlando, Florida looked like post-financial crisis? The empty homes. You remember what that looked like? All those people that were sold mortgages that they couldn't afford during a boom cycle? The Fed's not the firefighter, it's the frickin' arsonist. So what does this mean for you or your retirement? The Fed doesn't just affect your portfolio, it affects your entire future. Your purchasing power erodes faster than your savings grow. So if you don't own assets that outpace inflation, you fall behind. Your retirement becomes more expensive every year. Healthcare, food, housing, insurance, utilities, everything. Want tos become more difficult to achieve. That cruise, that trip to Rome that you never took becomes a lot more difficult. Your portfolio becomes more volatile as a result of all this. Fed policy literally creates instability, not stability. The boom-bust cycle. It's not stable. Meanwhile, your timeline shrinks. Retirees do not have the luxury of waiting out a 40% drawdown. And they let the tax tail wag the investment dog. They say, oh man, if I sell my non-qualified assets right now, I'm really gonna get drilled in taxes. Okay, well, what does a 40% loss do to your life? Everybody's got a plan until they get punched in the mouth. You're gonna have to sell the assets anyway, unless it's pure legacy, unless it's a pure legacy play for your kids, and then they get the step up in cost basis. But if you're going to use that money, man, it might be wise to take a look at what you've gained, systematically harvest that, because your plan has to be built independently from monetary policy. The Fed's incentives are not your incentives. Here's a checklist for you. The Fed protects banks, not families. The Fed protects Wall Street, not savers. The Fed protects the government, not retirees. Inflation is a tax on responsibility. Asset inflation benefits the wealthy, the people who already have money that own assets. Low rates punish savers and enable more growth artificially. That monetary policy creates future volatility, because all you're doing when you borrow is you're pulling future production forward. So you, as a result, have to have a plan that is immune to this. You can't rely on the Fed, because the truth is you were never part of the plan in the first place. Hopefully this was helpful for someone out there. If it was, please consider subscribing, liking, sharing, commenting. If you know somebody that needs to hear this, share it with them. Stay tuned for more. Inheritance launches June 2026. This is my tell-all book. I am blowing the lid off of big finance. I am exposing the incentive structures, the manipulation, the structural forces that quietly drain American wealth. And if you want the truth, I'm not here to impress you. I'm here to tell you the truth. That's my mission. Because I need people to understand. I pray with every fiber of my being that you will recognize that there is somebody out there that still cares, that wants you to know how it works. You deserve it. You're a human being. You are a child of God. I am no more important than you are. Nobody. You deserve to know how this works. Be kind to one another. Thank you.